Hey everyone, welcome back to my channel. In this video, I'll be talking about storyline. Yes, or you can say, you can call it directional bias. Yeah, is knowing the overall movements of the market. Excuse me, knowing the overall movement of the market. So this is GBP USD on the weekly time frame. I've talked about this before, the classic A and V level. So if you haven't watched it, go back to my previous video. I just explained it. Go back to my previous video. Then if the content or the video is helpful to you, you can subscribe to my channel. Now, using our line chart, we can spot the classic A level. And I've talked about it before. Whenever you see something like this, level that swept a previous high, this one now is for the sell, swept a previous high, broke structure to the downside, then have something like this, like creating liquidity, then came back to a point of interest, then sell off, targeting this low here. So this was what happened on this pair, GBP USD pair. Now here is our sweep right here. Then here is our break. Here is our break to the downside. Then where is our back to the candlestick chart. Now, so what happened? Market tapped it, then gave this nice rejection from the weekly level, then came back to this low and swept this low. Now this is on our weekly time frame, so you won't want to come here, pick your entry. This is a high risk entry though. Pick your entry, target this low, then put your stop loss. How do we? This is a 5 risk to reward trade on a weekly, which is not that impressive, not advisable. So you would go down to your daily or 4-hour time frame for refinement. Yeah, you have to refine your entries for your higher risk to reward trade. So we're moving over to our daily time frame. Now, the resistance level on the weekly time frame is also an order block. Is also an order block at the daily time frame. Is also a order block at daily time frame. Then with this inducement or liquidity protecting our point of interest. Now I won't want to choose the whole candle as my entry. I would love to find that area. Now looking or zooming in to our point of interest, we can see what we call RBS, which is a resistance breaks support, something like this. You have our classic A level for buying. The market will come, break that level, use that same level to sell off. You're having something like this. So this was exactly what happened here. We have the sell candle, then buy candle, creating this level for a potential buy. And if you look closely, markets have already reacted from that area. So here now is a potential sell area for us. Now refining it only on the daily time frame is not enough. Yeah, It's not enough. So I would love to go down to the 4 hour, which is excuse me, which is the final area for refining of entries. Now at the 4 hour, we can also spot the RBS here again, which happened around here, with our liquidity here. Now you can enter off from that level. You can enter off from that level, putting your stop loss above that level. Then you'll take profit all the way down to our weekly storyline. This is where our weekly storyline ends. Now we have our first trade. Now if you are looking for re-entry, right? If you're looking for re-entry, focus more on the 4 hour time frame structures. Now on the 4 hour time frame, let's zoom in. On the 4 hour time frame, we can see our break. You can spot our break over here. Wait, let me cancel this. We can spot our break over here. Then this is our resistance level, but market didn't make it up to that place. So we are using our QM. We are using our QM, stands for Quantmodel entry. Yes, Quantmodel. You can use our QM to enter from here. So for our QM, you'll be having something like this. Then a sweep. That sweep must create a break. You get, there must be a break of structure after that shift in market structure, or what am I saying? After the sweep, you must have a break of structure. The market will come back to this level here. Then boom, go down. So this was what happened here. In smart money concept, we call it the reclaimed order block. So here now is another interesting place to sell off from. Your stop loss above the QM. The QM is weak. Excuse me. Then still targeting our weekly low, which is a 18 risk reward. That's good. Then for another re-entry, you can see over here we have this support level, classic E level, that goes broken. You see, we have our classic V level for buy, that goes broken. Now what happened? Market came back, broke it, came back, tested that area, then started selling off. This is our liquidity to confirm that market is supposed to buy from that area. Now, okay, around here we have this pattern, that same pattern. Then market comes back, creates liquidity, and this means comes back to the area, then sell off. That's what we have here too. So using our line chart, you can use our normal entry model, a sweep of this high. Then we have our resistance level, or a classic A level. Then you head over to the line. What happened? Precision. You can see the precision. Sniper entry. Pick our entry form. That's classic A level. Then our stop loss above. We are still targeting our weekly low, which happened right here. So we have like 3 entries from the weekly zone with massive risk reward. We have this to be here, our stop loss to be above that high. Then we are targeting the week's low. So this is it. After this trade, you are done for the month. Know your risk management, risks what you can afford to lose. After this whole trade, 16 weeks reward, 18 weeks reward, um, 18 weeks reward, then 16 weeks reward. You are done for the week or for the month even. You are done for the week or for the month. Yeah. So, in summary, our entry model, let me explain it once again. Our entry model is the classic A level, which is this classic A level. Remember, there must be liquidity. Then, there must be liquidity. This is our second entry model. Once you have spot that break, then if market, yeah, that reminds me, if market creates this break to the downside here, then with a massive impulsive move comes back to your entry, don't enter. Market is likely to sweep that area, then continue selling. So you have to wait for your inducement or your stacked up liquidity. Now, if market reaches your area, your point of interest, you'd also want to see something like this on your lower time frame structure. Yes, on your lower time frame structure, you want to see something like this. Either sell from the QM or you sell from resistance level 2, targeting this low. Now this is for the sell. Remember, here is your point of interest. You would want to see this whole move at your point of interest in your lower time frame. Then what else? Okay. Yeah, that reminds me. You want to see something like this too, but this time around we'll be using our trend line. You want to see something like this. Then you have something like this. Now, this is what we call the trend line reversal pattern. I'll be talking more of this. I'll be teaching more of this in my next video. This is what we call. Let me make it more clear. Okay. Here, this is what we call the trend line reversal pattern. If you have the first touch, the second touch, okay, you have the first touch here, the second touch around this area, then with a break. Remember, the second touch must come with a break. Now we have the second touch with a break over here, then the third touch here, and it must be aligned together with your higher time frame POI, then you sell off. Now this is the entry model I use for my strategy, which is the key level, or you can also call it the alchemy strategy. So guys, if the video was helpful, try and subscribe, like, then share to your friends. Most important, don't keep this knowledge to yourself, share to your friends. Have a nice day.